You're scrolling late at night. Markets are red. News feels louder than usual. Someone says gold is about to explode. Another says silver is the most undervalued asset of the decade. And suddenly your brain starts whispering, what if I'm missing it? It stops being about metals. It becomes about safety, about not wanting to be the person who says, I should have seen that coming. Gold and silver aren't just assets, they're emotional anchors. When people ask where prices are going, what they're really asking is, am I going to be okay? And that's a very human question. Most people think gold and silver move because of supply and demand charts, but that's surface-level thinking. Gold is a reflection of trust. When trust in currencies, governments, or markets drops, gold tends to rise. When confidence returns, gold cools. Silver is more complicated. It's half emotional hedge, half industrial metal. It reacts to fear and growth at the same time. That internal tension is why silver moves more violently. When people try to predict gold and silver, they're really trying to predict human emotion at scale, and that's not something you can plug into a spreadsheet. Gold as a psychological asset. Historically, gold has responded to inflation expectations, currency weakness, economic uncertainty, and declining trust in financial systems. But here's the nuance most videos skip. Gold doesn't move because inflation exists, it moves because of what people believe inflation will do next. Markets are forward-looking. If fear is already priced in, gold may not surge even when headlines look scary. Silver's dual personality. Silver behaves differently because it has industrial demand. It's used in electronics, solar panels, and manufacturing. So silver responds to economic growth, industrial expansion, speculative enthusiasm, and safe haven demand. That's why silver tends to outperform during strong economic runs and fall harder during downturns. It's emotionally reactive. Interest rates and opportunity cost. When interest rates rise, cash and bonds start paying attractive returns. Gold and silver don't generate income. So higher rates can pressure metals because holding them means giving up yield. But again, psychology matters. If rates are high but inflation feels uncontrollable, gold can still perform well. It all comes down to perception. Confidence versus doubt. That's the real driver. Here's where most people get tripped up. They treat gold like a growth stock. They treat silver like a moonshot. But gold isn't designed to make you rich quickly. It behaves more like insurance. If you buy insurance expecting it to skyrocket in value, you'll be disappointed. But if you buy it for protection, it suddenly makes sense. This is the mindset shift. Gold and silver aren't prediction vehicles, they're resilience tools. Once you see them that way, your decisions become calmer. Instead of asking, will gold hit X price next year? Ask, what role do I want it to play in my financial life? If you want psychological stability during uncertainty, a small allocation might help. If you want long-term growth, businesses and productive assets historically do that more effectively. Balance matters. Avoid all or nothing thinking. You don't have to become a gold maximalist. You don't have to ignore metals entirely. Zoom out. Think decades, not months. Understand volatility, especially with silver. If swings would make you panic, your position might be too large. Preparation is calmer than prediction. Preparation says, the world is uncertain. I'll build flexibility. Prediction says, I know exactly what will happen. Only one of those creates peace. Gold will have strong years. Silver will have explosive rallies. There will be headlines declaring new bull markets. And there will be quiet years where nothing exciting happens. The real question isn't where prices go next. It's whether your financial life depends on being right about one asset. Real wealth isn't built on perfect predictions. It's built on resilience, patience, and emotional control. Gold has survived for thousands of years not because it always outperforms everything else, but because humans crave something solid when everything feels uncertain. So if you're watching charts and wondering what's next, pause. Ask yourself what you're really looking for. Security? Control? Reassurance? Once you answer that, your strategy becomes clearer. You don't need perfect timing. You don't need dramatic swings. You need steadiness. Because wealth isn't built in one bold prediction. It's built in calm decisions, repeated consistently over time. And patience, unlike price forecasts, is something you actually control.